Ever feel like Congress writes tax laws in a language only aliens understand? Meet Sarah, a 32-year-old graphic designer who just found out the one big beautiful bill is now law. In the next few minutes, you'll watch Sarah's whole money story flip, sometimes for the better, sometimes not so much. I'm Andrew from Blu Hat Bookkeeping, turning tax chaos into clean, profitable numbers. A year in Sarah's financial life? Columbus, OH, July 4, 2026, first filing season under the new rules. We follow Sarah, her retired mom Olivia, her side hustle fiance Leo, and her college buddy Jasmine, who is now a full-time day trader. Standard deduction and TCJA extension. Sarah's paycheck shows less withholding. Her tax rate stays at 22%, and the standard deduction didn't just stay put, it got a boost. The IRS now gives it a larger than usual jump for 2026 by adding an extra year of inflation to the formula. Why it matters. Avoids a stealth tax hike for millions of middle-income earners by keeping 2017's lower brackets. Child tax credit $2,500. More refund for the twins. Why it matters. Extra money for parents. $500 more per child means real savings each year. SALT cap jumps to $40,000. Sarah's coworker in high-tax New Jersey does a touchdown dance. Itemizing finally makes sense again. Why it matters. Provides more relief for homeowners and high earners in expensive states, but the benefit phases out after $500,000 in income. Tips and overtime deduction up to $25,000. Sarah moonlights at a brewery. Her $3,200 in tips becomes an above-the-line deduction. Why it matters. Helps workers who hustle extra hours. The deduction phases out beyond $200,000 for married filing jointly and $100,000 for single filers. Senior deduction $6,000. Mom Olivia, age 68, reduces taxable Social Security by claiming the new senior write-off. Why it matters. Offers an extra break for retirees on fixed income. It is phased out above $150,000 for joint filers and $75,000 for single filers. Trump, MAGA baby accounts. Sarah's newborn niece gets a $1,000 government seed in a tax-free growth account. Family can add $5,000 per year. Why it matters? Enables tax-free growth for education, home buying, or job training, helping families build wealth early. Auto loan interest deduction. Leo buys a U.S.-assembled electric vehicle. He can deduct up to $10,000 per year of loan interest from 2025 through 2028. Why it matters. Rewards buying U.S.-made vehicles and gives middle-class drivers a tax break. It phases out over $200,000 for joint filers and $100,000 for single. Section 179 supercharged. Leo's side hustle woodworking shop writes off $42,000 of new equipment instantly. The cap is now $2.5 million with inflation indexing. Why it matters. Puts cash back in small business pockets immediately and encourages reinvestment. 0.1% financial transaction tax. Day trader Jasmine sees $15 tacked onto a $15,000 stock sale. Small to investors, massive to high-frequency firms. Why it matters. Small for most, big for high-frequency traders, intended to shift Wall Street behavior. 1% remittance tax. Sarah's neighbor sends $500 to family abroad. An extra $5 tax applies. Why it matters. Funds U.S. programs while letting citizens claim it back. Applies mostly to cross-border payments. For Sarah, the net effect is a larger refund, thanks to the standard deduction, tip write-off, and maybe a future MAGA nest egg for her kids. But Jasmine's fast trading strategy costs more, and anyone wiring money overseas feels that 1% pinch. Want to know exactly how these changes play out on your 1040? Hit subscribe, ring the bell, and book a discovery call in the link below. If you're ready for tailored strategy, schedule a discovery call with Blu Hat Bookkeeping today before your next paycheck surprises you.